Andrew Holland is with us now, Chief Executive Officer at Avendus Capital Public Markets. Andrew, great to have you with us here. Thank you very much. So as we enter 2024, we'll have to get through January. And the reason I say that is because January seasonally, and I was putting this out in the morning, 12 out of the last 16 Januaries have been down. So there is a bit of seasonality there. I think it matters if you're trading. I mean, if you're investing, you can look past it. Because otherwise the overall picture looks pretty okay. Pretty good, actually. I mean, some of the fundamental drivers, etc. But if you're trading, what's the advice from here, Andrew?
I think it's going to be a choppy first few months, actually, Prashant, because I think, you know, if you look, all the positives we know, right, in terms of interest rates, the Fed pivot, everything's there. But the market's kind of very quickly rushed and priced everything in. So there's no kind of room for any kind of error in this in terms of, you know, if there's a escalation in the Middle East, if the Federal Reserve kind of delays, doesn't do a rate reduction in March, but leaves it till June, the market's just saying, no, it's all baked in, it's all done, and you know, we're kind of off to the races. So whilst I'm not trying to, you know, pour cold water on the market moves recently, I think January will be a lot more volatile because I think some of these things will be tested. Will test the market's resolve in terms of that Goldilocks scenario. So been great year end for all markets. But I think if it can consolidate, Prashant, in January around these levels, it'll be a victory, because I think if anything, we're getting into that overbought zone, which usually these, you know, there'll be something that brings the market down in the very short term.
So are you fully invested or not, Andrew, as you enter 2024 in your portfolio? Or are you keeping some cash in case the markets drop, you will go out and buy?
Yeah, no, we deployed. Fortunately, you know, going into the back end of November into the elections, and then throughout this month, we've been luckily very fully invested. I think as we start to see the market consolidate, then we'd probably take some more money off the table, and then look for those opportunities, which I'm sure will present themselves in January fully for us.
And where might these opportunities be? Andrew, good morning. Surabhi here. Season's greetings to you. The question is, where could the opportunities be? In the same sectors, the same kind of stocks, industrials, PSUs that have done well? Or do you see some dark horses out there? Well,
I'm not sure there's any dark horses to which have got any value. Maybe chemicals might be the only one, but I'm not tempted there. No, I think, so if you look at what we're saying, right, we're saying that interest rates are going to fall in the first quarter, by the end of the first quarter, and then maybe the RBI will follow suit in April. If that was the case, then obviously the banking sector still has a further leg to go. I know the RBI is at the sidelines, worried about unsecured loans, so we have to kind of watch the regulatory part of that. But obviously, if interest rates are falling, NIMs come under less pressure, and corporate capex will start to pick up. So I think that bodes well for the banking sector. So I think that will be one of the drivers, along with metals and IT. So I don't think anything else is going to take us away from those three kind of sectors driving the market higher, particularly if foreign investors come in. They're going to come for large caps, and they're going to go for these three sectors because they're all interest rate sensitive, and because the dollar would likely kind of weaken in that scenario, metals will do well. And of course, we're all awaiting, and let's see if it happens, for some further stimulus from China, which again would have a great impact or positive impact for the commodity prices.
So, Andrew, so banks, then, I mean, names like HDFC Bank, which are just now getting back to their previous highs, that's where the money is going to come into?
Yeah, no, into the large cap banking sector, yes, for sure. I think whilst I'm not kind of going away from mid caps and small caps in terms of a theme, I think it's the themes which will play out, which lend itself to some of these stocks. So, for example, you know, I've been talking to you many times about premiumization in the beverage industry. So there's many companies out there which will benefit from that, which would be in that kind of mid cap kind of sector. But I think if FIA flows come in, if PI foreign investor flows come in, then it's really going to be large cap where they'll kick off with their first investments.
You said you deployed money towards the end of November and through December. Do you want to tell us where you've allocated your money?
No, we talked about this many times in terms of what would drive the market, and that would be obviously if after the Fed pivot, it had to be in the banks, IT, and metal sector. So those have been the drivers of the index. They've been the underperformers of the index as well up until recently. So it wasn't a difficult kind of thought process in terms of where the momentum would be. But also metal's been helped by what's been happening in China in terms of commodity prices there. I said, I think going into January, it's going to be a little bit more volatile. We're pricing in perfection in terms of all of our forecasts, and the market's not sounding any kind of alarm bells in terms of what could happen on the downside.
Andrew, how have you positioned for this, the sectors of 2023? Have you played that whole rally in industrials and defense stocks and PSUs? I mean, my God, who would have thought that PSU stocks will return 100, 200, 300%? What do you make of it? And what would your advice be? Is it time to lighten some positions here or just keep on riding?
No, I think throughout 2023 have been, government spending on defense, renewables. So those themes aren't going away from us. Those will continue, for the next 2 to 3 years. So, there's still a lot of growth in those sectors to enjoy over the next 2 to 3 years. We talked about travel and the hotel industry. And again, I think that's going to continue to increase. The per capita GDP of $2,500 now means people want more experiences. So you'll see more travel. So airlines, hotels will be a continuous theme for 2024. And then two sectors we could have picked on in terms of new themes that we liked. And at the very beginning of the runway was the electronics manufacturing sector, where, again, domestically and export-wise, it's just going to be huge for these companies in terms of both profitability and revenues. Over the next 3 to 5 years, and they're all growing at 50% compound. And the premiumization in the beverage industry is continuing. We have a huge young population. They want to try many different things. So I think that again is at the beginning of the runway in terms of revenue growth and margin growth as people move up the curve in terms of what they would like to drink or eat going forward. So I think this is going to be a huge sector. So those are the themes that we've been playing and will continue to play. In terms of the PSUs, we've always said, Surabhi, that we like to rent these stocks, not really own them, particularly in the banking sector. And that's the kind of view and trading view we'll have on the PSUs.
You said you're not very convinced about the specialty chemicals theme, about it bottoming out as of now. Do you want to tell us about the rural sector and in terms of demand picking up, in terms of the themes which have not done well, where there has been a cycle downturn, has been IT, chemicals, and to some extent rural demand or consumer discretionary at the bottom end? Amongst these three, you're betting on IT. Specialty chemicals, you said you're not convinced as of now. What about rural consumption for 2024?
Yeah, it's a good question. It's a kind of a mixed bag at the moment in terms of the feedback we get, from companies and obviously from the brokers who are kind of writing reports on their travels. I think if I look at what I think the drivers for the economy and mainly earnings in 2024 is the multiplier effect from the government capex and private capex that we're seeing now. So across many different sectors, I said that to start filtering through to the rural economy, going into the second half of 2024. But I think I'm not banking on the rural economy to kind of pick up and have that consumption. I think there's enough, in terms of, like, say, the premiumization in beverages, which will continue and help earnings. So I'm thinking that earnings growth will be around 15% in 2024-25, and I think the market could probably be in line with that in terms of the returns as well for 2024-25.
Okay, all right. Andrew, good chatting with you today. I appreciate you joining in. Wish you a fabulous end to 2023. Have a fantastic New Year's. And of course, we look forward to more conversations in 2024.
Thank you, and wish you all a very happy New Year.
Thank you very much.